Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for Friday night, January 13th, 2023. I want to start with the just a swing trade portfolio update real quick. Change the order up a little bit. So this is clean energy. We're into it from the long back here at the 29 December. We had a nice move up today, a continuation. I'm just going to raise my stop halfway up the stack there, give it a little room. So that one is still in position, still in play. Ethereum is still working well. It started with a gap down today and then closed very well at the end of the day. I still think that has room to go. So I'm keeping that position open. I want to protect it at, let's call it at 720. So we're going to lock that in. That's an entry from 475 with a 25-cent risk. So that's over a 10-hour win right now. Had a bunch of stops get hit today, which I feel pretty good about going into the weekend. Not in Mexico. Mexico was a very orderly move. We had our stop here. I'm just going to move the stop up. Cliff, I've moved the stop to here. That still feels pretty good. Real estate, we had our stop here yesterday. It gapped down, and so I took that hit right away. Now it closed well, so I may be ready to resume that trade next week, but that was the nice move from here to here. I'm happy with that swing. Devon Energy also has had a nice 5 or 6 day swing. It rolled over, broke the PSAR, and because it was Friday going into a long weekend, I was content with that, with cashing that one. Brazil also had a gap down that hit us. It closed better, but it really wasn't going anywhere, so that really feels like the two good legs up are done, and then it was mostly under the PSAR today, so I'm content with that trade. We're out of that position. Treasuries also rolled over. That's been a nice move from about 100 to about 107, and that's a $10 move is a pretty good channel. So getting 7 out of that 10 feels good, and it was rolling over right at a previous resistance, so I feel good to be out of that one. And then U.S. Steel also rolled over after 3 legs up, so I was content there. So we have we exited about half the positions today. Let's look at the sniper trades of the day. Let's see where that one is. Alrighty. So today, this is in Alcoa, and this one. So this is 3 minutes. Here was yesterday's close. Here was the gap open. There's the OR3. It rolled over and fell out below the OR3, so we got short with a standard risk box, and it gave us a -1 almost immediately. I waited for the PSAR to flip before I re-entered, so stop and reverse would have paid off. But I wanted to see it get up into here, so we get the stop and reverse essentially there with a risk box. That moves in our favor. Takes the orderly exit in the middle of the dragon for 2R. So we get 1, 2 on that 1 unit of risk, and one of those pays for this loss, so we're at net +1 right now. Caught a 2 re-entry. for minus 0.5. So now we are at net 0.5 right now. Oops, that is a, that was a, I had thought about getting short at that one. The market was doing fairly well, so I didn't take that short immediately, regretted it, because it came right back to where you would expect. So I had thought about that one. I was not in a zero state, didn't take it. I took the COTA 2. This now feels like a COTA 2 because we have a low, a higher low in the RL10 turning point, and that's where it breaks the PSAR. So we put the standard risk box on it. Fails immediately for another 0.5. So all that work so far has netted out to 0 for the day so far. There's another COTA 2 here. You can see now that the, again, the swing low in the RL10 is higher. And the winter of the RL10 has turned to spring. So this is in the spring of MACD. So that's our entry at the PSAR flip. Here's our standard risk box. The usual. That one works. Now this, I want you to notice that this little pullback was enough to take it from summer to fall. So we're on alert, which means that we're really going to respect the PSAR now. But at the same time, it recovers enough to take out the previous swing high of the RL10. And so that triggers the 2R battle drill. So on this one, we've got a, there's our 1 unit of risk, 2 units of reward, and again, it has taken out the previous peak of the RL10, and you'll notice that it went from summer to fall briefly, and then back to summer. So that's an instant positive sign, ready to add or re-enter if we had gotten out. But it doesn't follow through much, so we end up with that second position basically scratching and collecting 2. So now we're back to plus 2 for the day. COTA 2 re-entry, scratches, and that's just enough for today. So this was in the last, half hour of the day, so we didn't take that, and so we didn't get that move. So we end up for 2 with plus 2 for the day in the sniper in Alcoa on the 3-minute charts. Check or hold. Okay, so let's look at so our 30-minute chart on the S&P. We're looking at market health checks now. So here's the SPY on 30 minutes. This was the gap down, and that was the move in the market down that really trapped all of those swing stops that I'd put in to protect and preserve. And then the market actually closed pretty well and closed near the top of the daily range. It's closing at the top of the 5-day range and made a new 10-day high today. So that's all good. That's a pretty nice way to go into a weekend, a long weekend. So that's a nice, strong close. Here's our daily charts. So this is SPY on the daily chart. And you can see that we had the winter, became the COTA 2 in the spring, and it closed really well today at the top. It's halfway up the stack to the previous RL10 high, even over, actually a little more than half, I would say. So despite the gap down, it really closed well, and that has some positive momentum going into next Tuesday. I would say your stop needs to be at about the 1 bar low, just to preserve the grinding move up. It's still in the spring, so you want to respect it. The one good thing about today was that we went into sideways. We'll see in a minute. Sideways quiet, which is actually a positive condition. The first one where we've had where you're actually paid to hold the positions over the night. That is actually a favorable market condition. It's healed that much, so we'll see if that has some positive rollover into next week. In the 150-day look back, you can see that we're about equidistant from the high to maybe at the 60-yard line, if I can put it that way. The 30 period is equidistant. The 10 period has a large range, and the 5-day has a fairly large range. So this was actually a pretty positive week altogether. That 5-day move from here to here is actually a pretty solid upward move for the week, and we're happy with that. And you'll notice that we had summer, fall, winter, and now we're back in the spring. But this is getting ready to turn back into summer pretty darn soon. So, pardon me. Yeah, so we'll look at the 3-day. Excuse me. 3-day bars here. We like the Kata 2 formation that's working here. This has been a nice positive recovery. It's gotten all the way back to the PSAR. That won't flip until the RL10 gets through there, so that's going to be that could happen as early as late next week. But that's actually a positive sign. And then, longer term, any price that's greater than 405, we would interpret that as a really positive sign that it was eclipsing the previous resistance. And then we would say, look, that now puts 430 in play. If it can break above 405, then there's another 6% move to the upside that could be in place. So we like that. That's the 3-day, I should say. And then the 9-day. This is much slower. This is that recovery out of COVID, and then this is all the inflation in the Ukraine war. But it's holding here above 370, and the PSAR has been solid. It was tested, but the RL10 has reversed and crossed through the dragon. So that's actually a positive sign on the longer term. This looks like the healing process is in place. And there will be folks who would look at this as the beginning of a inverted head and shoulders. So if this can hold and this goes, again, we'd be looking for confirmation above 410 on this chart. So if you look at the 3-day bar, 405 was a key, 410 will be a key, and then both of those put 430 into play if we can continue that motion. So this is a market that is healing. When we look at the pure just regression lines, again, we're going to see that the negative move of the RL270 has flattened out because of this positive move. That has made the RL270 flatten out. The RL90 has become positive, and you'll notice that it is pulling away from the RL270. So this is gathering strength and going. And again, we got to see the price get above 410 will be very clear signal that again it can get to 430. So the COTA 2 is working, and here's the next test around 408 to 410. All that feels pretty good. So let's look at the sectors today. Is this the one I want? No. Not the one I want. There we go. So from a distance, we'll zoom in here in a second. You'll see that we have the S&P kind of right in the middle of the stack. You have a cluster of the Qs, emerging markets, and small caps here, diamonds here, and then treasuries sold off a little bit along with Tesla. So let's zoom in now and look at the let's look at the upside first. That's always nice. Because we are in sideways quiet, we want to see what was working today. So here is our S&P at plus 0.39. You got staples, oil exploration, uranium, and materials up to 0.6. The next stack of clean energy, finance, the FANGs, discretionary, blended commodities up to 1%. And we have wheat and precious metals, the two ARCs, silver, oil, and Bitcoin up to 2.3. The two winners for the day, financial disruptors, Coinbase at 5%, Robinhood at 3%. Then you have Alcoa was the very strong metal at 2.4. Then Nvidia, the strong semiconductor at 2.35. Apple, finally a good day at 1%. Texas Instruments, semiconductor at 0.49. So 2 out of the 3 semiconductors were better than the broad market. But only one of the metals and the other 2 metals were really weak. So there we are. So a pretty reasonable array of winning positions, and I like that both tech and the small caps were better than the S&P. So that bodes well for next week. We had broad market strength. Weaker than the market. Remember, the S&P was at 0.39, and here's the cutoff between winners and losers. So Ethereum, still 0.36. I'll take it. Mexico and Aussie dollar 0.33. Tech, agriculture were the last ones in the money at 0.15. Then you have S&P biotech, lumber, commercial real estate, the other lumber, residential real estate, marijuana, Brazil, and lithium down to minus 0.83. And then VIX 2.5. That actually bodes well for Tuesday, the decline of volatility. So now the individual companies that were weak. So metals were really a mixed bag. You had U.S. Steel was off 1.5. Cliff was basically flat at 0.1. And then Alcoa was that stronger one up there. So the metals really differentiated. Now, what that means to me is that when they split up, that you no longer have a sector movement. You have individual companies doing their own thing, which tells me that the XLB move is starting to lose steam, that it's no longer just buying the sector. They're really differentiating by companies. That leads me to love Nvidia and Alcoa as the two standouts, because you see the same thing in the semiconductors. Intel got smoked. Texas Instruments was not as good as NVIDIA, and NVIDIA was great. So you're seeing a divergence now, a differentiation in the individual targets. Devon Energy gave back 0.69. PayPal, Squarespace, and Boeing. This is the first losing day in Boeing in a long time. It didn't lose much, but the fact that it was underneath the market says if you've got a swing in Boeing, it's probably time to protect that. Okay? So, generally speaking, the market feels pretty good going into the long weekend. And Tesla was really another disappointment, another disappointing week in Tesla. All right, let's take a look at the traders for today. That's right. Come on. All right, traders. Here's Woj. Let's see what we got here. I like the quick cut. The stop and reverse was excellent. And then we missed the Kata 2. Remember, you got lower highs, I should say, and then it crosses the dragon, and the dragon is rolled over. That's a high priority short. And then when it crosses below the VWAP, that's a high priority short, and you would get paid on that whole move. Still 1.8. EWW, this one failed for -1. A scratch failed for -1. I think he got a little gun shy and missed the continuation. There's a Kata 2. There's a Kata 2. We got to get paid on that kind of a move. We shouldn't be leaving, giving up 2R on that one. Just stay with it. It moves. Devon Energy was dead money for most of the day, but he did squeeze a little bit out of the chop. Tesla, he gets a quick reversal to get paid. That's good. I think you're trading in the chop on U.S. Steel in here. That's -1.5. That otherwise you'd have had a positive day. Missing this one in the rollover and then crossing the VWAP. We got to hit that one. You got the second leg, but we missed the first leg. Remember, the dragon rolling over and then price crossing the VWAP, that's really a strong signal to the short side intraday. Apple, let's see. Quick scratch, got paid. The second position gave back all of the gains of the first position and netted -1. So we went from +1 to -1 by adding the second position. And then I think he got discouraged and didn't take the Kata 2 reentry until it was too late. So some learning points today. This is, let's see, not sure whose this was. This is in the U.S. Tech 100, so the NASDAQ. And this little reversal intraday, that's amazing. Second position, third position, and all out for a couple quick scratch, and then probably +1, and netting 4R for the game. Well, this is probably 4R here, and then that looks like 2 more for 6. So that's pretty good work right there. Let me see whose that was. Marius. Well done, sir. Agnieszka in the Aussie dollar. Let's see. She plays the Kata 2. Quick loss, recovers a piece. Now, on the lower highs and then breaking through the PSAR, nails that, missed the re-entry, but gets a scratch and a micro gain, so 1.2. We might do better here and add another 1R, but that's really a good play right there. That's nicely done. The OR3 on the front end of this thing would have given us that trade. But still, we'll take home 1.2 and be happy. This is the U.S. Canadian dollar for Agnieszka again. Here's the SSC right by the numbers, nails it. Caught a 2, PSAR flip, nails it for 2. Quick scratch, and an extra 1R. So total, that should be plus 4. Because you got 1, 2, 3, and 4. So that should be plus 4. Really good work. Nolan scratches out a positive day. This quick reversal and then scratch. I like the piece. You're still firing. I like this one. I think when you get that first urgent move up into here, you're almost at plus 1. And then we let that move 7 bars against us to scratch. So take it at the edge of the dragon. And then this PSAR flip should get paid. Then this SSC reverse gets paid. Quick loss, quick scratch, quick scratch. So we were at plus 0.2. I think we could have been at a full 2.0 if we hit those correctly. NVIDIA brings in 1.5 for the day. The MMRB was wide enough that it was calm. So he gets the, after the gap down and reversal up, he goes ahead and takes it with a standard risk box, gets paid, notices but didn't take the short signal, gets paid, couple quick scratches and gets paid for 1.5. Very relaxed, nicely done. Right by the numbers. Satya continues to do well here. After the morning shenanigans, he gets the continuation breakout above the peak of the RL10. So that's an emerging dragon. Gets paid. Takes the PSAR flip, crushes it. Plays a 1, 2, 3 entry. Gets paid for 5.4 in this first solar. Nicely done. And then in U.S. Steel, Kyun is able to scratch out a win. So this is a little late getting in. This is at the end of a second leg, buying at the peak, and it fails immediately, so just get out. You can hit that right here where the PSAR flips and the VWAP rolls over, but this is still good. I like the second position and the quick exit and then the immediate re-entry to get paid. That's good work. Couple quick losses and scratches. Stayed out of the chop and then nailed it and then gave back a little. So 0.6, not too bad. I thought that was pretty good. All right, let's look at the report. So as always, we start with the weekly report. So this is the, the once a week view of things. And I want you to notice that in the last couple days, we've gone from bearish normal to sideways normal, and now we have moved into sideways quiet. Now, sideways quiet is one of 4 market conditions that is favorable for holding overnight positions routinely. And those are any bull plus sideways quiet. That lack of volatility is favorable, and you can see that the volatility indicator is rolling up. We are on risk on. We're in the green. We're actually above the 200-day moving average, so that's going to get talked about this weekend, you can bet. ETF2 increases to 100% exposed, and we're seeing strength still in the euros everywhere we look. Industrials and energy, and the conservative Dow has been the strongest U.S. sector. So all that's looking pretty good. So far, so good. Haven't seen the January sell-off. We've seen the market health checks. So we'll go right to the BMR portfolios, blended monthly rebalancing portfolios. So the blended monthly rebalancing takes 70% of the 3-month plus 30% of the 6-month to give you the composite. Now, we've added a 1 week and a 1 month just so that we can start seeing where the turning points are, although the BMR system is really only concerned with those 2 columns. The information value of the 1 week and the 1 month often gives us insights into early turnaround possibilities or the weakening of the long term. Now, what I notice is that the Europeans, which have the 3 strongest blends, all had a pretty good week and a pretty good month, so those are still good to go. Those are still going strong, whereas diamonds, the strongest U.S. sector, is lagging these 13 members. So treasuries and the Dow are both lagging, whereas the Russell is finding the energy of growth inside the U.S. So it's in the middle of the pack, but it's had a pretty good month and a very good week, and that actually is a sign of growth and strength coming back into the U.S. In ETF 22, we add the XL series like materials, industrials, energy, finance, and we see those 2. Industrials and materials, when they're in the lead for the sector spiders, that's actually very good for Main Street because the front end productive part of the economy is recovering first. And then energy and finance, more cyclic in nature, are doing pretty well. So we don't even see tech until you come all the way down here. So S&P tech and NASDAQ tech. Now, they've had a good 1 week performance, but they're still lagging in terms of the 1 month, 3 month, and 6 month. So what that means is there's still a long way for tech to recover if this is the beginning of a recovery. Strength in discretionary in Latin America, and then there's your strength again in the Russell. But the Euros are doing well, or the globals are doing well. In ETF 32, we add some additional focused ETFs like silver, which has had a great run but is starting to cool off. China's recovery of 13% has cooled off a little bit. Clean energy, that's that swing that we tapped into. It was a good swing because it had been smashed down so far that the SSC recovery allowed us to tap into a very fortunate and lucky swing. And I love being prepared because it makes me lucky. Latin America is in the middle of its little recovery after a disappointment, and Brazil is in its little recovery. So those were both really good swings for us as well. I like the strength in emerging markets. And there's your globals. There's EFA index, Australia, China, Asia less Japan. All of those before you see the first U.S. index, which is diamond. So there's still strength in the globals. In the Dow 30, Goldman Sachs is recovering. Still not as strong as J.P. Morgan in the finance sector. DuPont and the industrials has been really doing well. And now this was the week that Boeing started to stabilize. So after an amazing month and an unbelievable 3 months, 6 months, thank you, Ukraine and Russia, this is the first sign that Boeing is cooling off. So this is why we've added the 1 week and the 1 month, is it gives us a chance to have an appreciation for when are things slowing down. So Boeing feels like this week it has started to crest. So we want to be mindful of that. First time we've seen Merck start to get weak. Procter, Amgen, Walgreens. So weakness in the healthcare, weakness in Coke, and the first bit of recovery in Microsoft. So I'm looking for Microsoft to take up a leadership position in the recovery here, along with Intel. So the semiconductors and Microsoft have a way to go. In the market market health check, mixed bag inside the U.S. The value plays and the diamonds doing well. Tech is still lagging. China, South Korea doing very well. Most of Europe doing very well, especially the Euro large caps. Energy and industrials showing the strength in the XL series. Consumer discretionary, because of the weakness in Tesla and Home Depot, has really been hit. And healthcare moving to the bottom of the stack. Very weak. In the asset classes, as bad as the S&P has been, everything else has been worse, or most everything. Treasuries are lagging. Blended commodities are lagging. Oil is lagging. The only things better have been gold and real estate. So I really like the broader retail real estate because it has a little dividend and is still looking pretty good on the swing trade. So I like the recovery in that sector. We'll look at the liquid shorter term traders. We're looking for things that are volatile on the AT%. These are the top 30 by average daily dollar volume, and the ones in the green are the most volatile compared to their peer group. So that's the tradables. China, and now, sorry, not VTI. So biotech, gold miners, Brazil, semiconductors, and oil exploration for very liquid, very volatile, great trading vehicles. We'll look to the daily now. We've seen the sniper trade of the day and the health check, so let's go right to dashboard 1. Again, sideways quiet is positive. That's pretty healthy. That's recovered from all of that oversold conditions we saw a couple weeks ago. Volatility's looking favorable. Big winner, Goldman Sachs is recovering. The industrials like Caterpillar, 3M are doing well. Healthcare is still weak. United Health, Pfizer, Johnson & Johnson, and Walgreens, and Coke continues to be lagging a little bit, although we saw yesterday that had some possibilities. In the Dow 30, strong move continuing in Caterpillar, in Alcoa, JP Morgan crushing things, as is Nike. So the winners continue to win. Losers continue to lose. Disney, Tesla, United Health. There's a 5DD in Johnson & Johnson setting up nicely. A handful of auto framers. There's 4.5 in Pfizer and 4 in Johnson & Johnson. And Johnson & Johnson is a 5DD. So let's have somebody mark that chart up to look at tomorrow night for the swing trades. The indexes, the ETFs, all of the globals are just crushing things left and right. Metals and mining continues to do very well. None of them on a positive auto framer. Looking at the regression line fractals for the the stalking the deep value or for collapsing. So Tesla, United Health, Coke, and Chevron are all geared to either have a nice recovery or more likely to collapse further. Inside the ETFs, it's natural gas, ag, oil, exploration, and oil. In the red, these are the ones that are overheated and might be ready to protect or could be just continuing RS winners. Nike, Boeing, JP Morgan, Caterpillar, Cisco. I got to believe all of those are poised to continue the gains since we have just come up into sideways quiet, and that's actually favorable on the long side. If you were going to add money, it would be normal and natural and easy to look at who are the current winners, and those are the winners based on trade location. I especially like JP Morgan and Caterpillar. Cisco is kind of a quiet, stealthy tech opportunity. Inside the snipers, we have a couple Godzillas in the S&P 500, a couple snipers, stealthy snipers here in the tactical symbol set, including marijuana. I still like that with a dollar stop. I think that has some value possibilities there. The usual stats for the movers, the one-day movers. There were only a couple in the S&P 500 that were better than 2-to-1 Z-score, but that includes JP Morgan with a big move. I think there's a lot more left in that one, to be honest. Citibank trying to join the party. And there's United Health with a big down move today. There's more weakness in United Health waiting to come in. You know I like the double greens. So there's NOC and American Airlines. Strong 1-day and 5-day movers, so that deserves attention. Standard stats. For the tactical set, and again, big broad movement up in the market. The laggards are the ones that get your attention. Johnson & Johnson, Pfizer, Procter, Merck suffering, although you would have to say Pfizer is showing earlier signs of recovery, as is Merck, so that might be the recovery out of oversold. That might be the two to look at. Johnson & Johnson not impressive. And our top 10 symbols based on frog statistics, the ones that have the trading value or the ones that have a large range percentage times a high frog quality number, and that remains Tesla, Clean Energy, Alcoa, Apple, Microsoft, Disney, Boeing, Brazil, oil exploration, and metals and mining. That's a really strong source of swing ideas for me, because what I like to do is get them well started with intraday trades and let them grow. And they have the daily range and the consistency of a frog box to generally be helpful in that regard. Okay? All right, that's everything we got for today. We'll look at the swing trades you guys post tomorrow night, and we will catch you in the Zoom session tomorrow night. So thanks for your kind attention, and have a great, safe weekend.